Hey everyone, welcome back to Corporate Decoder. Today we are going to look at a company that had a bit of a bumpy ride meeting up this year. Let's just say this report has a lot more voting and less actual business for shareholders. This is a report from Tenon Medical Incorporated, and it is all about their annual meeting of stockholders that finally happened on the 18th of September of 2025. Now, the interesting part here is that this meeting was supposed to happen way earlier, but it kept getting pushed back because they couldn't get enough people to show up or send in their votes. It is like wanting to have a party, but nobody RSVP'd, so you have to keep rescheduling. They had a session in July and another in August, and both were adjourned, which is a fancy word for postponed, because not enough people showed up. Finally, in September, they managed to get enough stockholders represented either in person or by proxy to make the meeting official. To get this meeting going, they had to set new deadlines for who could vote, and by the 22nd of August 2025, they had about 8.6 million shares of common stock, plus some preferred stock which also have voting rights. So, what did they vote on? First up was electing the 7 people who will be in charge of the company, direction, the board of directors. Now, looking at the results, it seems like all 7 nominees were indeed elected. For example, Richard Ferrari got over 2.6 million votes in favour, but here is where it gets a little odd. There are also broker non-votes. This means that some shares were held by brokers who didn't get specific instructions on how to vote from the actual owners of those shares. In fact, for every director nominee, there were nearly 2 million of these broker non-votes. It is a huge chunk of votes that were essentially not cast by the ultimate owners, while all the nominees sailed through with plenty of votes for this large number of broker non. Votes is something that catches the eye. Next up, they voted on whether to approve the exercisability of certain warrants. Think of warrants like options to buy stock in the future, but these were issued back in March 2025. There were 2 types, Series C-1 and Series C-2 warrants. The big news here is that stockholders voted to approve this. The vote for this proposal had over 2.5 million votes in favour, and only about 120,000 against. These warrants will allow people to buy new shares of the company's stock at a set price of $1.25 per share, with one set of warrants exercisable for up to 5 years and the other for 3 years. This approval means the company is making it possible for these warrants to be used, which could lead to new shares being issued in the future. Then, the shareholders voted on changes to their stock incentive plan called the 2022 Equity Incentive Plan. The company wanted to significantly increase the number of shares available for employees and executives to receive, going from about 190,000 shares up to over 1.3 million shares. They also want to make it easier to add more shares to this plan each year automatically. This is a pretty big increase in the total number of shares reserved. The vote here also passed with over 2.2 million votes for it, although there were more votes against this proposal compared to the warrant approval, with over 400,000 votes against. This means the company is setting aside a lot more stock for its internal team, which is often done to attract and retain talent, but can also dilute existing shareholders' ownership. Finally, and this is a pretty standard vote at these meetings, shareholders were asked to ratify the board's choice of Haskell and White LLP as the company's independent auditor for 2025. Think of auditors as the accountants who check the company's financial books to make sure everything is reported correctly. This vote also passed overwhelmingly, with nearly 4.5 million votes in favour. Now, what is the story here? Well, the main story is the struggle to even hold this meeting. The fact that 2 previous sessions were adjourned due to a lack of quorum, meaning not enough voting power was present, tells us that the company in the past has had a hard time getting its shareholders engaged. However, the fact that they finally succeeded in September and the proposals passed with comfortable margins shows current management has managed to get enough support, at least for now. The approval of the warrants and the expanded stock incentive plan suggests the company is looking to raise capital or incentivize its team, potentially for future growth or to weather tougher times. The large number of broker non-votes on the director elections is a continuing point of interest, as it indicates a disconnect between the beneficial owners of shares and their actual participation in corporate governance. Looking at it from a Warren Buffett perspective, you want to see a company where management is acting in the best interest of shareholders and where those shareholders are actively participating. Here, the initial difficulty in getting a quorum is a red flag. However, the passing of the key proposals suggests that either management convinced shareholders or the brokers stepped up with their client's shares. The significant increase in the equity incentive plan is a strategy to motivate management and employees, which can be good for performance. But it also means more shares will be issued, potentially diluting the value of existing shares if the company S growth doesn't keep pace. The approval of the warrants at a $1.25 strike price means that if the stock price goes above $1.25, these warrants can be exercised, leading to more cash for the company and more shares outstanding. This could be a sign they anticipate stock price appreciation or need a way to raise funds. Overall, Tenon Medical Incorporated seems to be moving forward with its plans for future growth and employee incentives, but the initial struggles to get shareholders involved raise questions about engagement. The company is betting on its future, as evidenced by the increased stock incentives and the exercisability of warrants. As always, investors should keep a close eye on how these new shares from warrants and stock plans impact the company's financial performance and shareholder value in the coming quarters. Alright, that is our breakdown of Tenon Medical Incorporated. Latest filing, what is your take on these numbers and what they signal for the company's future? Are you concerned about the broken non-votes or excited about the growth plans? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.